What is up, everybody? So happy to be here with you on a beautiful spring day. We have Tom Sosnoff here, who, as you know, we look forward to these events. They're the most important thing we do, where it's nonstop action, education, free-flowing conversation. Tom, nice to be here with you.
Looking forward to it today. We haven't had a talk during this. The last talk we had, everything was kind of normal. Everything's since our last talk, the world came apart, right? So we got a lot to talk about.
Yeah, I assume it's been a lot of fun for you. I was having an interesting conversation. Someone asked me that they're like, you always used to do calendar spreads, and now you don't do them anymore. And I was like, well, we had like a decade of slow grinding up. So you're supposed to buy cheap calls and sell premium. I go, but in this market, the activity is so high, you don't want to overpay for long-term calls. You'd rather be selling the short-term premium. And I just want to confirm you agree with that.
Yeah, I do. Yep. Yeah.
And I mean, I guess I wonder how you're doing with this because you're a premium seller. And a lot of the moves do revert. Like Monday, we looked really weak. So if you were selling puts, you were rewarded Tuesday. If you had a good Monday to Tuesday, but then if you sold into it, the calls on Tuesday, you got hit Wednesday because there was follow through. I've been seeing for the most part like a lot of whiplash. This is the first time where we had back-to-back days of up, which I don't love as a trader. As like an investor, great, but as a trader, these last 3 days I don't love. Everyone's like, I'm like, no, this isn't good. What do you think?
I mean, I've been short a lot of premium, and so the last 3 days, from a premium contraction, and I had a little bit of long delta, have been okay. I think overall, this whole move, I would have been very happy if none of this happened. Like it didn't really, even given the extraordinary opportunity, the beginning of this move, like the first 2 weeks of it, were really challenging for premium sellers. And myself, like every other premium seller, like every other trader, I kind of dug myself a hole, like I think a lot of people did. And so I've been battling out, and I'm doing a really good job battling out, but I don't think I needed the aggravation. Like I kind of feel like I expand. I'm like a team that was down by 20 points that came all the way back to take a lead, but I used up all my energy,
Yes.
So I feel like I didn't make a lot of, headway, and I feel like I used a lot of bullets, but I worked my butt off during the last month, trading, basically everything. And, we made some unbelievable trades at the bottom and some unbelievable premium sales, but we also got caught with, a lot of short gamma on the way down.
Were you leaning in a direction or just on both sides, like the whiplash? Or
when we started going down, I was short, and so the first little down move was like, "Oh, this is great." But then, as a premium seller, you go from short to long, and when moves of this magnitude in about 3 hours. And so by the second or third day, I was caught long, and I was rolling down, and and at some point, probably like everybody else, like you and everybody else, I felt, okay, this is overdone. And so I'm not gonna adjust. And I let some deltas build up, some long deltas build up, and they still had another leg down to go. So, that's what happens as traders. We fight that.
Not last week, the week before, I've been making my 300 plus trades a day, like literally like trying not even to get up to use the bathroom, like like there all the time, not wanting to miss a second, and a little bit strung out, and then last week it was spring break, and we were going to Las Vegas and Arizona, and I was going with my best friend who I've known since middle school, and we lived together, and nobody knows me better. And we were in Vegas for 2 nights, and he's like, "Let's go gamble." And at first I didn't even want to go down, and I kept him company, and usually I gamble. And I sat there and I didn't play anything, and I was just watching him and sitting there, and he's like, "Is this the new you? You don't gamble?" I'm like, "Dude, I just want to break." I'm like, I'm so tired and of trading, and it was so much. And the swings, I go, I don't want to be on vacation having swings right now. I just want to watch. I have no interest. Like, what am I going to do? I'm going to play for $1,000 in the casino? Like, no, that doesn't even move the needle for me. And so he was like, usually he cheers me on and I go big, and this is me just cheering him on, sitting there, and there's a big role reversal.
Yeah, I had something similar. On the day we basically crashed that Thursday and Friday, like 2 weeks ago, my son was getting married. And so it was a destination wedding. So I was with my whole family and my wife's there, and she's like, you better turn off that computer. And I'm like, you don't need me. I'm not, I don't need to be here. Like, I don't really need to be here. I got other things. And she's like, it didn't go over well.
Oh my God, I can't imagine. By the way, being in California watching the markets, I wonder if I would have had a different life, where the markets open at 6:30 in the morning and you're done at 1. It's pretty interesting. Do you ever trade California time?
Well, that's where my son got married in Southern California, because that's where he lives. And in that, I have to tell you the funniest story. So the morning that the market, it's like a Friday morning. And the day before I forgot the exact, it was the beginning of April, first Thursday in April. And then the market was down, like the S&Ps were down like 250 points that day. And then overnight they were down another 250 points. So it's like 3:00 in the morning. And I'm up looking at my computer, and my wife's like, what the F is wrong with you? She's like, you get out of here. Like, get out. So I'm like, fine. So I get dressed, I take my computer, my phone. It's literally 3:45 in the morning. Okay. I go into the lobby of this hotel, and I sit there and I set my stuff up, and in comes another guy who's a hedge fund manager at some fund, and like, he's also there on vacation. He's at some fund in San Francisco or something. And he comes in, he goes, you a trader? I go, yeah. I go, you? He goes, I'm a hedge fund manager. I go, you get thrown out? He goes, yup. I go, me too. And so we're sitting there at like literally at 4:30 in the morning talking markets with a random stranger, because everything I'm thinking is going to be lock limit down. And I never left that lobby area till about like 9:30 or 10:00 in the morning. Like I was there for 6 straight hours. And
Unbelievable.
And the two of us were sitting there talking and trading. He was on some institutional platform, and I was basically giving him a lesson because he had no idea what he was doing.
Oh yeah, he walked into a gold mine sitting next to you.
Well, he was so freaked out. Like, I've traded every single crash and everything. It wasn't life changing for me, but for him, it was like, he was like, he was peeing his pants. Let's put it that way. And so I'm like, dude, calm down. This is, it's just a trade.
The wives come down. They see him like,
no, the wives don't come down.
No, like to go to the pool or whatever.
My wife couldn't care less. She's been around with me for 40 years. She does not care.
By the way, and so what everyone knows, what we're talking about is the volatility, the change in volatility in the markets, just going over and everything we saw. And it started with the Liberation Day.
Yeah, this is 2 days after that.
And so I started hearing people say buy Liberation Day. That was like the message you were hearing going into the press conference. And I had some long positions, but I was pretty light either way because I wasn't comfortable. And I said, I'm going to watch when he's speaking, and if the market starts to go down, I'm going to buy some puts pretty quick. And the first thing that happened from 4 to 4:15 is I was watching the Qs. They were driving them up. They had closed at like 476 and they were at 483. So the market was trading a lot higher. I'm like, well, I'm not buying this. So at least I did that right. I'm not buying into this move. And I stood up and I walked out and I came back a minute later and the Qs were at 460 something. It was after 4:15 now. And I'm like, what? I missed it. And I was like, my first feeling was just utter frustration that it had this massive drop in 2 minutes, and it was right after 4:15 where you could trade the options. So you had to make a play beforehand. And it took me a couple of days just to get back. Like, I don't know. I just felt like I missed it, and it was frustrating.
Well, there was plenty more chances after that. So,
Yeah.
it's been an incredible period of, volatility and activity and opportunity. It's impossible to pick your spots perfectly. There was definitely a lot of price extreme. I don't think we're going to see anything like what we saw over the last, 3 or 4 weeks, for another, at least couple of years. Could be 3, 5, 7 years, that kind of thing. So I don't expect, any kind of repeat of the magnitude of the moves we just saw. So hopefully, like everybody on today is a survivor, and they were able to navigate through that. Although, albeit, I'm sure, based on my interactions with literally tens of thousands of customers over the last couple of weeks, I know this move was not good for 95% of the people, because anytime you get markets that are essentially destabilized by some kind of executive action, tweets, whatever you want to call it, but anytime you get this kind of movement, it's generally the destabilizing of markets is not necessarily good for most. Well, it's not good for investors, and for most cases for traders, some volatility is good. Volatility between 17 and 25 is good. Volatility over 25 to 40 gets a little hairy for everybody. I don't care who you are, professional traders alike, everybody.
Um, they started to talk about the bond market, liquidity in
Sure.
the bond market, stuff like
Sure.
that. I think for a lot of people, to be honest, me myself included, I think I understand it more than the average person. But I still think at that point, when they start talking about that, is it something you're paying attention to? And
Well, yeah,
what is
I
the
I
concern?
trade bonds very actively. I've been trading bonds for literally 40 years, and I trade bonds as probably one of my primary trading vehicles. The bond I highlighted here. The actual when people say they're trading bonds, what they're trading is ZB. And by the way, just so people know, I have Quentin Q. He's on the chat today. He's one of the reps on our trade desk, and he's really good. So if you have any questions, you can fire off. I also have Britt on there. She works with me on the content side, and so if you have any questions, you can fire off stuff. And if later on you want to email me, I'm just Tom at Tasty Live, just so in case you have questions, because I don't watch the chat while Adam's talking. But Adam, if you're going to trade bonds, the bond symbol is /ZB. Now, this is the long bond. This is kind of what everybody quotes when everybody talks about the bond market. This is the product that they're trading, the ZBs. Now, the most actively traded bond, or the most actively traded debt product, is /ZN. This is the 10-year note. And as you can see, the volume on the 10-year is 1.4 million contracts. That's more than trades in the S&Ps. So that's why it's important to watch. The 10-year is /ZN, and it has a very liquid option market. You can see right here. This is just from today's volume: 25,000 of these, 12,000 of these. These are massive numbers of option contracts trade in the 10-year notes. 10-year notes are also half the size of the contract size. They're about half the size of the 30-year, wrong symbol here, of the 30-year bond /ZB. And you can see the bond traded, 300,000 contracts. The notes traded 1.4 million. But we mostly trade bonds. And as you can see up here in the May contracts, there's thousands of options that trade at each one of these. These are futures options, but they trade the exact same way that listed options trade. And when we talk about bonds, we talk about the 30-year ZB or the 10-year ZN. There are other bond products, like there's a 5-year and a 2-year, and there's a 90-day, but those are not really retail products. Those aren't what customers trade. Those are too short term. They're mostly all institutional. The markets are a little wide. The option markets are wide. If you're a customer and you want to trade bonds, there's really ZB and ZN. And if you want an ETF, there's really only TLT. And TLT is a lot less liquid than ZB or ZN, but TLT is about 1/10 the size of ZB. So if you want a smaller product, you trade TLT. But that's it for bonds. That's really all there is.
Well, ZB, it says ZBM5. Is that what you trade?
Well, ZB is the future. The M is June, so that's the M5. But if you're trading the options, you can trade April, May, or June. But the options pair up with the June bonds.
And I've never traded them before, so
Don't start now, Adam, because you're an addict, and
well,
you are one of the worst junkies I've ever met in my entire life. And so, if you,
oh no,
this will be an uncontrollable market for you because it's 24/5. So you won't be able to sleep. So for everybody else that's on, I recommend that you start to follow the bonds because but for Adam, I think you need to stay away because otherwise your family's going to leave you. I'm worried about you. But the reason that it's important to follow bonds is because when people talk about it's impossible to understand what the Fed is up to if you're not watching the bond market. And what's been happening in the bond market for people that don't usually follow bonds, this is a chart of the ZBs. And when remember, bonds have an inverse relationship with interest rates. So when bonds go up, interest rates go down. And when bonds go down, like they have recently, interest rates go up. So everybody recently has been talking about the Fed. Fed's got to lower rates. Fed's got to lower rates. Trump's been yakking about the Fed's lowering rates. He's mad at Jay Powell for not lowering rates. But you can't lower rates when the bonds are going down. You can only lower rates when the bonds are going up because there'd be too big a disconnect between the actual marketplace and what the Fed wants to do. So one of the reasons that we always try to get individual investors to follow the bond market is even if they don't want to trade it, just to understand, what rates are doing. As you can see here, as the bond market goes lower, and ZBs are going to be virtually the same. I mean, the spread trades, moves around, but this is the ZB market. It's gone down too, which means it's very hard to lower rates when bonds are going down and rates are effectively going up. And there are also products that you can see the actual yield. So if you go to / for example, 10Y, this is the 10-year yield. It doesn't trade very much, but you can see the actual yield here, one tick wide, is 4.31. So if you want to know, hey, what is the real yield? Well, you can see here it's 4.31, and that is the 10-year yield. And if you wanted the 2-year yield, it's / 2YY, and they have products out there that tell you different yields. They also have products on the CME site that will tell you what the chances are that they have a Fed watch tool, and they'll tell you what the chances are that the Fed's going to do whatever the Fed's going to do at the next meeting. I'll show you this right now. This is the 2-year paper. Now it's not really trading tonight because this is after hours, but you can see the 2-year yields right now are let's call it 3.68 to 3.7 in that range. But I guess the main point here is just to show you that if you start following the debt instruments, you'll really have a good idea of kind of what the Fed is capable of doing or not capable of doing and why they can or can't do something. And I think it's very important to understand the bond market. You don't have to trade it, but just to understand it.
So if you're, and I'm not going to trade it for the reasons you said. By the way, night number 2 after Liberation Day, I couldn't sleep and I woke up in the middle of the night and I started watching the futures trade.
Sure. And I can picture you. You're going to be thrown out many times into the other room, and you'll be in the basement or the guest room.
Well, I haven't been enabled for futures yet because I never used it. And I went to the page where it said allow me to trade futures. And I just stared at it for a couple of minutes. And I was having it was like a slide into his moment. And I'm like, I can't because for the reasons you said,
the advantage to futures, just so everybody understands, the options on futures are the same as options on stocks. Everything is exactly the same, all the same models, all the same formulas. The only difference for futures is the products are bigger. So the micros are small, but the regular futures products where the options trade are bigger. They're about 10 times the size. So instead of 100 shares of stock, it's like the equivalent of 1,000 shares of stock. But the advantages of futures are that they trade 24/5. So the options are not that liquid overnight, but the futures are, and they trade 24/5. And they also are very capital efficient. There's 6 times more leverage than in the stock and option marketplace. So they're highly leveraged and they trade 24/5. So they're very capital efficient. but they're the exact same product. Like, in other words, if you were to trade ES, it's the same thing. One ES contract is the same thing as 500 shares of spiders. And one MES contract, which is the micro, is the same thing as 50 shares of spiders. So it's not like it's not rocket science. It's just a different. It's not standardized the same way, but it's the same stuff.
By the way, if anyone has any questions in the box, you can see them. I saw Jim chatting in and Wilson and CJ, but we feed off your questions for Tom. And one I want to go back to, and it's something you casually went over, and I understand what this one means, but I still like to just bring it back and make sure everyone understands. When you're saying you're long delta, that means you're selling puts, correct?
Yes, it means it just means that the theoretical option equivalent is that you're long stock. So when you're selling puts, whatever the delta is on the put, that's how many shares of stock you're long when you sell puts. So if you sell a put with, let's say, 30 deltas, if you're selling a put in, let's just say, Google with 30 deltas, you're long 30 shares of delta. You're long 30 shares of Google. And so in the option world, we refer to everything via deltas. And so you're either long deltas or short deltas. That's all there is to it.
Does everyone understand that?
And on Tasty, we take it a step further. So on Tasty Trade, we beta weight all your deltas for all your positions. So if you look at the top of the page, I don't have it open this way because there's too much data in there. But if you on the page, we show everybody your beta weighted deltas. So you always know kind of what you always know what your total positions are, the totality of all your positions, beta weighted to the S&Ps.
Yeah, it's you guys go above and beyond in terms of what's available on the options platform. Uber had a good day. We were having an interesting conversation, so I'll tell you where we went. I wrote it down, and I said I was going to ask you. I'm not. This is where it went. I just want to be very clear. In my community, I'm sure you're the same. We don't talk politics because people could go anywhere else for that. We only talk politics as it relates to trading the markets without a bias, just neutral commentary on how it affects. So the conversation was about Tesla, and it was saying, well, a lot of Democrats are against Elon Musk because of Doge, and Tesla sales are down. And the question was, when he steps away, how long will that resentment last? Will it eventually go away? And on the opposite side, what we had was there were a lot of Republicans that were annoyed at Bud Light with their marketing a couple of years ago. And if you look at the stock, it took a while, but it came back. And so the question was, do people with different political affiliations trade differently? I don't know if that could be answered, but I didn't know.
I'm not afraid to tackle that, as you know or may not know. I enjoy political discourse because I don't think we have enough of it that's done right. And I also feel it's important to be very open about, what you think and don't think. And I also feel like as a trader, I'm able to separate my own personal, political opinions with what I think is a good trade or not a good trade. So I have a lot of opinions about Tesla and things like that. And I can speak from the heart on Tesla because I bought my first Tesla in 2015. I bought a Tesla Model S, and I was definitely, I was out there singing the praises for Tesla. And I liked my Tesla Model S so much, I bought another one in 2021. The same exact car. I just wanted the longer battery, the longer battery. And so I bought my second Tesla in 2021, same Tesla Model S. In 2025, this year, I sold my Tesla at the market because I refused, because I turned on Elon because I don't like his politics. I don't like him anymore. and I bought a Lucid, and I did it without hesitation. But I still trade Tesla every day because Tesla is one of the most actively traded stocks. But as a consumer, will I go back in and buy a Tesla? Never again. As a trader, will I trade Tesla? Every freaking day, because it's one of the best trading vehicles out there. So I don't let my own personal, feelings about Elon or whatever, get in the way. I could care less when it comes to trading. I just trade what's in front of me, and that's how I run my life. That's it.
So you'll trade Tesla both sides.
Both sides. Oh yeah. No, I bought Tesla when it got down. I bought it a bunch of times. I bought it in the 225 level. I bought it at the 235 level. And before earnings yesterday, 2 days ago, I actually sold puts naked in there because my feeling was they were going to miss their number, but the stock was going to go higher. I just felt like so much bad news was built into Tesla that I thought no matter what happened, the stock was going to go higher. And because I thought Elon would say that he's stepping away from, politics and he's going to focus on his car company, which was the right thing to say. And I felt like that the stock was going to go higher, and it did. So I've been trading Tesla from the long side. But that's it.
And how does a Lucid compare to a Tesla?
They're virtually the same car. The Lucid's a little nicer and it's got like cooler features, but they're the same car. Basically the same exact car.
By the way, regarding your hotel story, when I was away, we went for a hike in Arizona, and so we were like, it's like a deserty kind of hike, like a lot of cactuses.
Sure. Yeah.
And I was walking. My kids were complaining, like they're in high school, they wanted it off.
Yeah.
And there was a guy with his shirt off, older guy, and he's standing there on his phone in the middle of the hike, and he's going to his wife. He's like, "I just made $24,000 in 4 minutes." And I walked over to him. I said, "What are you trading?" Because that's the only place you're going to make $24,000 in 4 minutes. And he was like, "Hertz." Bill Ackman said that he's involved in Hertz and it's getting squeezed. So I bought it and I sold it. And then we started talking, and it was the same thing. Like, I just said, "What are you trading?" These could be like commercials. By the way, the one you described literally could be like a trade commercial.
Well, what's funny about that Hertz trade was, and I don't do things that, necessarily that Ackman does. But what I thought was so funny about that Hertz trade was Ackman wanted to come out so bad and promote something, but he couldn't find any stock cheaper than Hertz. Like, those guys never trade like a $7 stock. It's just not in their, it's not part of their game plan. Like, they just don't do it. But he was so nervous about the market that he found some stock that he didn't think could go much lower. I don't know what price he bought it, like 5 or something. And, and so I thought that was kind of a funny, public statement of talking your book about Hertz. But anyway, I thought that I didn't trade it, but I thought
it was just he was looking for something safe with
exactly.
A low floor. He wanted a low floor.
Yeah, he wanted some PR, but he wanted something where the risk was like $1, not $50.
Right. No, that makes sense. But usually, and I say this, and I think you would agree, unless you're like Bill Ackman, who could make a statement like that and move the stock. When the market's really beat up, I was telling people you don't want to trade the cheaper stocks.
No.
All the money's going into the big names. Yeah, right. You want to talk about that?
The only cheap stock that I bought, I actually thought of you when I it's funny because I was trading one morning and with Tony, and we were sitting there, and he's like, this was pre-market. He's like, "What are you buying?" And I'm like, "I'm buying SoFi." And I never trade SoFi, but I just remember in the back of my head that you used to trade it all the time. And I'm like, the stock was trading like whatever, $11 or $12, and now it's in the 8 handle. And so I just started buying it in the 8 handle, and it was, I think I even bought some in the 7 handle and pre-market. And then as soon as the market opened, we started to rally, and we sold it all in the 9 and 10 handle. It was a great trade. But like I was thinking of you because that's the only time I bought a cheap stock was SoFi. I don't know if you were watching it or trading it then, but it got down.
First of all, extremely flattered that you think of me while you're trading. I talk about you all the time, but to have it go backwards is appreciated. So the only thing I could compare the announcement to, first of all, I don't think we've ever seen anything like it when Trump said the 90-day pause.
Yeah.
The only thing I could compare that to was an intraday Fed rate cut that happened over
1998.
No, it was in the early 2000s.
Oh.
And I just remember it because I was day trading, and I had a 6-figure day. There was one guy who made over $1 million in a couple hours, but there were a lot of guys, because it happened like between 12 and 2, who had stepped out just to grab pizza or something. And I'll never forget the look on their faces when they came back in and saw what had happened to the market. Like it was sad to say, like, people still talk about it. It was an intraday Fed rate cut where the market just went bonanza. This was even faster. That you could buy things and it would happen over hours. This one was like, if you weren't in before, you weren't getting in. It was too fast. But what I did was, I was fortunate enough, I had Russell calls, 80 of them, and 20 calls on the Qs, 10 points out of the money for $1, which ended up being worth $35 that day, which is crazy. But what I did was, I looked at SoFi, because I look for the tertiary plays, the things that might not have moved when everything moved because they're not as important. And I bought 200 calls in SoFi, and I made like an extra 7 or 8 grand in that. Just like, and I wasn't even watching it, but I knew that was cheap enough that if we kept going, that was a good one. So I did buy it, and I bought a lot of it just for a short-term trade, because I'm looking at that point when things are moving so. What do you do when it's moving so fast and you feel like as a human you're at a disadvantage versus the computers? I look for things that maybe are just like going to follow the leader, so my reaction time is a little bit better. But what are you doing?
I don't really do that, only because I tend to be more of a fader than a trend trader. So you're more of a trend trader. I think I'm more of a fader. So so I don't really do that. It's not my style.
Did you sell into that rally at the end of the day?
Which the day that when the whole tariff pause thing?
Yeah.
No. I regretted not selling because the next day they were down big, but I thought there would be some follow through, so I didn't sell.
I went out long thinking there would be follow through, and was surprised at how much we gave back the next day. I only gave back like 15 to 20% of what I had made. So I felt like proud of myself that the up was better than the down, but I still lost more than I was planning on because I couldn't believe how much we went down the next day.
Yeah, I was surprised too.
By the way, this week was weird also because I felt like Monday, like I guess what was closed? Was the bond market closed Monday? What was closed Monday?
No, the European markets were closed for like Greek Easter, Greek Easter, Greek Orthodox Easter or something. Yeah.
So it just felt like it was a forced selling, and it seemed like at 2:00 people were like, "This is BS." And you saw, if you would have just watched the last hour of the market, you would have thought we were in a bull market because it was nonstop buying for the last hour, and then it just carried over the rest of this week, which is like, but now would you say we're kind of like in no man's land a little bit?
Yeah, I thought we just talked about this on the close today, but I felt like that we kind of played, at least I played Google to the upside tonight. I played Google and Intel both to the upside, thinking that there'd be a little continuation. Google's up a little, Intel's down a little bit, but I thought they could gap up tomorrow morning on the Google earnings, and then there'll be a good sale. So my game plan was to go home a little bit long Google, and then get short tomorrow morning on a gap up opening.
Well, that plan, part one, looks like it's on its way.
Part one's good so far, but a lot of stuff can happen before. Last night when I woke up this morning, S&Ps were down 35 handles, and they closed up 118. So it's not that easy, not that easy to kind of figure out what's going to happen tomorrow during the day.
When you're so I have like a lot of different thoughts right now, but So I'm looking at the questions. Frank said, "Is there a good, simple course to learn options? Still a little confusing to me." You can get a lot of stuff from the website for the basics, right? On your website.
Yeah, we also have a Learn Center that's totally free that you can do on Tasty Live or Tasty Trade. There's a whole Learn Center where you can learn all about options and futures and everything. It's like we have a couple courses up there, super simple, really easy, totally free.
And Quentin had put out to everyone that if you don't have an account open, you could sign up. And yeah, I've been trading on it for probably.
Yeah, but if you sign up, go through Adam's link so we can, credit him. Yeah.
There's I've been on it for 8 years, and I always feel appreciative of it, especially when things speed up. Let's just say that.
Yeah, we held up really well. Tasty's never had a minute of downtime since 2017 when we launched. We're the only platform in the world that's basically a perfect track record uptime.
Yeah, Calvin, you're running it, but it's interesting. I had someone I know that lives locally signed up for Taste Trade, and I had to explain to him because he went down to he put on not the desktop version.
Yeah, we have a lot of versions, but I prefer the desktop over the web-based.
Yeah, and I was like, the desktop, you just make.
Yeah, you got to put you got to use the desktop version, in my opinion. I mean, our devs would love more people to use the web-based, but I prefer the desktop. It's faster, more stable, it's cleaner, easier to use, everything.
I love the desktop version.
Yeah, me too.
So right now, with volatility where it is, you said you don't think we'll go back to what we saw for a couple of years. So you think volatility's peaked. So how are you adjusting your trading going forward right now?
Well, you have to trade. I'm not a macro guy. I'm like you. Okay, I'm more of a junkie, and I don't think about things. I don't look at my trades and think about what am I going to do this summer? What am I going to do in the fall? What's going to happen, to the economy. That's not really, you can't think that way. You have to separate that and use one as a talking point and the other one as kind of, I'm a trader first. And so I really, always just trade what's in front of me. And as much as I think, that we're not going to have any more moves like we had, recently, that crazy volatility expansion, because I think the market's tired of that. I think that, it's not going to be a dull couple of years. That's for sure. And so I think there'll be plenty of opportunity both ways, to the downside and also to the upside. That's it. I mean, long term, I'm bullish, but I think you see the market's a little more vulnerable than people thought.
I have a question about IPOs.
Sure.
We saw a couple recently, and it seems like they've, number one, gotten much faster at getting options around IPOs. I remember it used to take longer. Now it's like
it used to take a month. Now we're doing it in like 2 days.
Yeah. Were you influential in that, by the way? Okay.
No, but the exchanges buckled under pressure from traders because, in order to get enough underlying stock activity, they really have to have an option marketplace.
So, number one, Newsmax was interesting because it was an IPO that's short squeeze. It went up huge. I used to be the number one advertiser on Newsmax back in like 2006 through 2000. Sorry, I started in 2006, but probably 2009 through 2011. I was the number one advertiser. My face was on their site as the number one advertiser. It started with an errant. I was supposed to do like a small buy and accidentally sent me to their whole file. And I would have thousands of people signing up for my newsletter, buying things. Like, it was the best audience. And so I got to know Chris Ruddy, the founder, and I didn't love him. I didn't think he was a good guy and whatever.
Did you buy the stock?
No, I didn't like him. So I had negative memories of him.
Oh, okay.
And so I was waiting to get shorted, but I was very careful. I ended up very small. I shorted it at 115 and covered some at 67, but not like literally 100 shares, just for personal, to make sure I was on the right side of where I wanted to be on the trade. But Newsmax was a big one that moved around a lot, and now one that I think if you're not have you looked at CoreWeave yet?
I've traded CoreWeave a little bit. I traded it the first time it got down around 40, and I haven't traded it since. Where is it now? I forgot the symbol actually. CRWV or something.
Yeah. By the way, Steve wrote in, this presentation is great. What are you guys looking to sell? And the answer is nothing. This is just Steve, that's the thing. This is just education and trying to make you a better trader. And I do think Tasty
it's engagement
platform, Steve. If you want to check out the platform for options trading, but yeah, this is just pure love of the game.
See, we do this 12 times a year for the love of the game. It's CoreWeave is 41.77. I've traded it a couple of times. I don't know that I've traded the options in there though, Adam. I just traded stock, I think.
Well, so the reason why I think you'll like this one, and the reason why I think you're going to end up trading this one, now that you thought of me with SoFi, you'll think of me with this, is because of the strong views on both sides. So when it was IPOing, you heard all these things like it's not even gonna IPO, and the numbers going down, and people don't want to be a part of this, and that made me want to buy it, and it did have a good run up. And now every time they talk about data centers, this stock reacts. And so they price the options. I know the options are never wrong, but when you have a stock with so many different viewpoints, it seems like if my thinking is that it's going to hold around this price. Like there's a lot of people hating on it, but then like Nvidia is coming out and being like, no, CoreWeave is a really good company, and that's why we invested in them. And so I think the premium's high. So I started off, I wanted to get involved, and I like my trade. I'm down in it a little bit, but I still like it. I sold the 35.2750 bull put. Actually, I'm not down because this is only on my open. I'm up on it. I sold a 35.2750 bull put, and I had sold the 57.65 bear call. When it started to get in trouble, I rolled that down to 45.5250, and I have like really good premium collection on stocks that's not moving that much. I don't know. But I wonder, like, I know you say options markets are never wrong, but can we take advantage of the stocks that people are getting to know and that there's higher premium because it's new?
Well, sure. If you look at the volatility in May, it's 123. And the expected move here, what is it, $10 almost? It's a huge expected move for May. I mean, I probably would maybe widen out the short strikes a little bit, at least on the call side. But I don't know. That's just me.
But you wouldn't be willing to take it. Then you would just roll it back if it got in trouble?
Possibly, yeah. I mean, I think for me, it depends if you're a little bearish here, then just leave it. I don't know. I don't really follow CoreWeave. I've only traded a couple times. So I think I traded it right around $40. That's what I remember. And I think we just scalped it a little bit, but I don't remember.
It's very new. So I don't know. There's so many people that hated on it. There's this contrarian play that I think will draw you.
I don't have an opinion on CoreWeave. I don't even know anything about the company.
Jim said, two cool traders bullshitting. Jack said, Tom does not sell anything. Went to one of his seminars back in Atlanta in the mid 2000s. Down to earth guy that lets his products sell themselves. Successful people don't have to sell anything.
I don't sell. I don't have anything to sell. I mean, unless anybody. No, I have nothing to sell.
Except your Tesla, if you still have it.
I was going to make a stupid comment. No, my Tesla. I wrote about this last weekend. My Tesla texted me. It's still on the lot, and it said I need a charge because I forgot to delete my my app. So it was texting me that it needs a charge. So it hasn't been sold yet.
And Britt said that you're coming back to Atlanta on May 30th.
Good news. We will be back in Atlanta. I'm doing a live trading show in Atlanta with Tony, May 30th. It's a Friday morning. I cannot wait. It's our first live trading show together in almost 12 or 14 years. And it's going to be a complete shit show, as we say. It's going to be great. So if you have a chance and you're in Atlanta, you want to come, tastylive.com/events.
And I was actually, to promote this event, to get more people in the audience, I did an interview with Benzinga. And they they get a good crowd. Like it's like a pre-market call.
Yeah.
And what we were telling him to do was come on to this call. So
nice.
He's like, the guy interviewing me was like, that guy Tom. He's like, I've never met him, but he seems so cool. He's like, what's he like?
I'll tell you a funny story about Benzinga.
Oh, wait, let me tell you one more thing because it's a compliment. He goes, what's he like in person? And I go, let me put it this way. Last time he was in New York, I went out to dinner with him and his team. I'm like, and he ordered everything on the menu. He's like, really? I'm like, and it wasn't 4 things on the menu. There were like 30 things on the menu. He's like, that is sick. And we were just talking about that, which is really funny. Sorry, now what you were saying about Benzinga.
Well, the only thing I would say about Benzinga is, so when they first started out, they were a small company out of Detroit. I think they're still in Detroit, but they were a small company in Detroit. And the guy who was the CEO, was going to every brokerage firm, and every brokerage firm was like, he's trying to sell their news.
Jason.
Yeah. He's trying to sell their news and all this stuff. And if you've met Jason, he's kind of like,
crazy.
Yeah, little, and very persistent. Okay. So I'm like, so he came to the office and I'm like, dude, we got like 3 different news sources. I don't really need a 4th news source. And he's like, and he's bothered, he's all over me. He's like, you got to do this. I really need it. Like he hadn't signed anybody up yet. I go, so you're telling me I'll be your first customer, and he goes, yes, first brokerage customer. I'm really, you'll change our lives, all this stuff. I go, if I do this, will you promise not to talk to me anymore? Because he was driving me crazy. I go, I'll give you your first contract. Just don't talk to me anymore. Okay. At least for a year. And he's like, done. And so I gave them their first deal that they ever made. And then the company has done amazingly well. I'm proud of those guys. They did great.
Do you still have their news?
I don't think we do. We don't on Tasty. I'm not sure. We do some stuff with them. I don't think we have their news. I'm not sure what exactly we do with them, but I know our team does something with them. I just don't know exactly what it is.
By the way, this is years ago when it was like his first 3 or 4 years in the company. I didn't remember him, but he was like, Mesh. He's like, Michigan. We went to Michigan together. And and I ran into him on the street and he was having like a Benzinga expo. And my office was right there. He's like, dude, will you come to my expo? Please come to my expo. And I was like, all right, I'll come to your expo. And I like walked over with one of my friends after lunch. And I was like, yeah, Jason told me to come by. They're like, yeah, it's $2,000 per ticket. I'm like, I thought he meant like stop by.
Well, you Michigan boys have to, you have to stick together.
Yeah. All right. So yeah, IPOs. I definitely want to. Oh, did I hit something wrong? Yeah, I'm glad we touched on IPOs because we've seen a couple more.
I hope there's more IPOs because I like new stocks when they come. Unfortunately, for online brokerage firms, we really can't participate in the IPO because we have no way to divvy up the stocks. But I hope that there's more IPOs just because I want new names out there, and I think it's good for business, and it gets people, excited about trading different things, and it brings more underlyings into the space. So we like IPOs, and we hope that the IPO space. One of the things I don't like about markets going down is that everybody pulls back their, all their corporate finance and all their IPOs and things like that. So, it challenges that space. You saw a lot of companies pull back recent IPOs because, the market wasn't, it's just a tough market for them. So I hope that when the market rebounds, those IPOs will come back out.
Do you feel comfortable trading if there's volume? Do you feel comfortable trading IPOs options when they're there, if the volume's there?
If the volume is there and once they have settled down, I don't like to trade them on the first day because I'm not confident that everybody's figured out the right implied volatilities. But within a couple of days, I'm pretty comfortable.
Remember we had talked about like a bullish skew in Palantir, and you said it didn't mean anything, but sometimes you won't short a stock because
right.
It looks like it would hurt you if it went long, if it made a big run. Do we have any more of those? Because I still can't get over that I didn't trade Palantir when you said that because it was at like 40 and it went to 100. Anything else you're looking at with like that bullish skew? I know it's not an indicator. I just want
not after the recent down move. I mean, I think there's a lot of stocks that got really interesting to us, Palantir got interesting to me. I mean, Reddit got interesting in the 80s. There was a lot of stocks, that got crazy cheap, or relative. Not I shouldn't say crazy cheap. It got cheap relative. A lot of these stocks have rallied back, 20 or 30% already. Stocks with very high beta have rallied back quite strong. So I would be, there's nothing that jumps off the screen right here that I think, if we had this conversation 2 weeks ago, I would have said, yeah, there's a lot of stocks that I think are really cheap on a relative basis. But having this conversation today after we rallied, 200 and something S&P points the last 2 days, 225 handles, I would say nothing that jumps off the screen at me right now.
I did do a couple of trades. I realized I thought I told you, but I was talking. I had my regular call earlier today with the members. I did do some stuff you would be proud of, like the wide spreads. Like I put on like a NVIDIA 70 by 35 bull put credit spread.
Nice.
For 42 cents, and then it was like worth nothing now. And then I did the Russell. I did 173. Well, actually, it was even lower. I was 152, 147, and then 202, 206. Just collecting premium in that environment, and the premiums come down a lot on those. So it was those.
Yeah,
anything I did with premium was good. Collection.
Any premium you sold in the last couple of days has been very good. There's not
on either side.
Either side, yeah. There's not a lot out there right now. I mean, things have come down a significant amount, so I don't think there's a lot of like what we call juice out there now. It's volatility is still high, but on a relative basis, IV ranks are a little bit low. So it's a little more challenging to find. It's a much safer trade environment right now, but it's a little harder to find, like kind of rare opportunity.
I totally agree. Today was the least amount of trades I made in a long time. Daniel wanted to know, and just before it gets too late, and by the way, everyone, a lot of times we get into trade setups and proper trades, and this one was just, there was so much going on.
This was a little chatty for us. This was like a chick chat.
I'm sorry, and that's my fault. I should have gone back to the technicals, but I was just enjoying it too much. And I think everyone else was too. And please let us know if you were. But Daniel wanted to know, he had asked for some trade examples. So did a couple other people. Do you want to maybe just show the Google trade you put on for tomorrow so they see like the way you set up a trade, if you have that? Or
yeah, sure. I'm happy to show what I did in Google. I mean, I don't know if it's going to be how good it's going to be. I mean, I don't have that big a position on in Google, but there's so I have a bunch of, well, I guess, let me take a look. So in Google, I'm short some May 145 puts, which are these puts right here. So just naked short some of those. And then that's just a pretty simple trade. That's just a straight bullish trade. Then we have on, it looks like a short strangle, very small, this one, just an at the money short strangle, the 150, 165. This is actually in June. And then a little bit bigger, about, what is this, 85 times. I have this strangle on in this strangle on in June, which is kind of a cheapie, but I wanted to go really wide. So I sold the 120, 200 strangle, and that one a little bit bigger, like I said, about 85 times. So I have a naked short 10 lot of puts, a 2 lot strangle, very tight one, and then an 85 lot of this is short, not long, as this will be covering. So I'm actually short the 120, 200 here. I'll do it this way, 120, 200. So I'm short this strangle. And so I don't know, we'll see what happens tomorrow. I didn't trade it that big.
Relative. It's all relative. If Google, let's say it breached the 145 over the next coming days, like let's say, I don't think it would, but let's say it had a really big sell-off, whatever, and it was below 145. What's your defense against that? I
would have sold the 150. I would have sold the 150 calls.
You would sell a call against it? Yeah,
I would sell the 150, depending. If it broke under 145, I might sell the 145 calls. But I mean, I would sell either the 150s or 145s, and if it went down to 135, I would sell the 140s. So I would aggressively sell calls against the naked ones. Like if the stock was up huge tomorrow, I would roll up these puts, and if it was down huge tomorrow, I would roll down these calls. But in the case of Google tomorrow morning, I'm just going to take this position off and take profits.
Okay.
I mean, it moved. The expected move this afternoon in Google, the expected move was, let's just see. I'll tell you. Hang on 1 second. The expected move in Google, if I go to the weeklies, was a little less than. I think it was $9 or $10, showing $10 up here, and the actual move looks like it's. Where's Google? The actual move is it's up 7. So it's inside the expected move. So I think that Google is going to be a nice little winner tomorrow for premium sellers.
And even the calls will probably lose juice too, because
they're both out of the money. Calls are going to get killed. Yeah, sure.
Yeah, that's a nice trade. All right, there we go. That was a trade, Daniel. Yeah, all right. Next time we'll do more trades. This was fun though. I mean, the market's been fun, which is nice. So you're back on speaking tours. People are excited. You're coming to Atlanta. And then you're going to LA. You're going to San Diego.
Well, the whole schedule is on our website, but we'll be in London, Milan, LA, San Francisco, Austin, Texas, Chicago. We're in like 11 or 12 different cities. I don't even know all the cities we're in, but we're doing a whole tour this year and 2 cities in Europe. So if you have anybody on that's in Italy or in London, we'll be in London on the June 20th on Triple Witching, and we'll be in Milan on June 23rd, Monday night.
Are you going to New York?
Oh yeah, we'll be in New York too.
Wow, give me a heads up. I'd love
to.
Brett,
when are we going to be in New York? I think we're going to be in New York in September, but she'll tell you, right? You can look on the chat. She'll tell you because she's going to be with me. So wherever I am, she is. So she'll put it in the chat. I will be in New York, and we'll be at the Webster Hall, which is
nice. That's 5 days after my birthday. Big birthday for me, Britt. So maybe I'll come watch it.
We'll be at Webster Hall, which, if you remember back in the day, it used to be the Ritz. And I think it was the Ritz back in, like, I don't even remember what year it was, but it was where I went with my wife on our first date, shockingly, to the Ritz to see Tina Turner. And back, I don't even know what year it was, and now it's called Webster Hall. And
you're speaking where you went to see someone perform.
Yeah, that's always cool. But we've done other shows at Webster Hall. It's a really cool concert venue. I don't remember exactly where it's on. It's like in the Village somewhere, but I don't remember where it is.
If you are in San Diego, and I'm sure you've been there before, but my aunt lives there. The walking around Torrey Pines is awesome. It's so pretty and nice and not too hard. Like, I love that. We do that whenever we're there.
Oh no, I've never done that.
Yeah. Tom, I always love these. This one was fun. This one,
it was great.
I feel like it made my day that you're like sitting there saying to Tony, like, "Oh, Adam would be trading so far." I love that. That makes me feel good. But thank you. Enjoy the draft tonight. I know you got you're speaking somewhere else later too. You could tell people, by the way, where I don't know.
No. It's a private thing. But go Bears. The draft in Green Bay is going to be so much fun. So can't wait to see it tonight.
All right. Thank you so much. Great seeing you. And I hope Google stays where it is tomorrow.
Thanks, everybody. Love it. Thanks, Adam.
Bye.